if you are struggling with losses, trying to find out which strategy works or why price does the opposite of what you're doing, then this video is for you, because I'm going to talk about supply and demand and how impulses and corrections will help you pinpoint the exact point when to trade the market. So I'm going to take a look at a few examples. All of these examples have been shared in my social media and YouTube, so you can refer to these videos to see that what I'm saying is what I'm saying. Okay, so I'm going to show you, or try to show you, how to master supply and demand. Okay, it's more complex than this, but with these you're gonna have like basic rules that might be silly, but they are really, really powerful. Okay, so here we have the Nikkei index futures. I shared these analysis a few days ago, and this imbalance of the daily time frame at 52 is playing out really, really well. So the thing here is that mastering supply and demand on futures or forex or cryptos or stocks is the same thing. I mean, because markets are fractal, everything that happens on one time frame can be extrapolated to other time frames, smaller ones too, bigger ones as well. Okay? And it is the foundation of trading, in this case, the futures market. Okay, we are not using indicators, no news, no fundamental analysis. We don't need that. And if you don't believe that, just check my video analysis on my social media and Set and Forget Online training community, and you will see what I mean. We are using just price action, patience, and understanding what is in control. And in this case, we have this daily demand level over there. So here on the left side, this is like a mess. Okay, we have like bearish impulses, weak bullish impulses. Okay, and we don't have large candlesticks. Okay, like consecutive large candlesticks or a very strong large single large candlestick. And then we zoom out in the largest, the largest impulses on the chart on Nikkei index, okay, are very clear. Okay, this is the strongest impulse, bullish impulse, followed by this one, and then this one. Both of them with two large candlesticks, and this is an even stronger one because there is a bullish gap, and the gaps are the strongest shape of an imbalance. Okay, so what happened? I remember this was the elections of the new prime minister in Japan, a woman, I don't remember her name, and then on Sunday, gap returns, and it's been playing out ever since. Okay, there have been many other trades. Okay, so the Nikkei index is like rallying. That means that the yen is dropping, and I've talked about this on another video, correlation in the forex market. Okay, it's on my YouTube channel and also on in the trading community. So what happens after a very strong rally? We must wait for the pullback. Breakout traders here will fail because after a very strong rally, we have to wait for this. That's the highest probability scenario. That doesn't mean that it's always going to happen. Sometimes it just price rallies and then bases and then continues to rally. What can we do about it? Nothing. Okay, but when we see this, we wait. Okay, we see this impulse on the Nikkei futures, we wait to then pull back by a few. Okay, so most traders don't lose because they lack intelligence. It's because they lack patience. Okay, so in this chart here, they lose if they had traded at the top because they don't understand price action with supply and demand and the expectancy for this daily time frame on the Nikkei futures. Okay, you can have the best looking setup on a smaller time frame. Okay, but if you're trading against the higher time frame, long-term bullish bias right now on Nikkei index, bye-bye, my friend. Okay, you are swimming against the current. And when you see these demand levels over there in a smaller time frame, you can see that it reached the proximal line. This is the daily demand level. Okay, seen through the 4 hour, then it reaches that proximal line, and look at the reaction. Okay, and now it's trying to do the same. So, but right now price action in the 4 hour is like very tricky. Okay, so the imbalance already played out. It reached another impulse, and then you should manage the position up the top, as I explained on another in the trading community. Okay, because on YouTube I'm sharing some videos like this, but I just cannot share everything. It's too much. So what happens here is that what actually moves price is supply and demand. You like it or not, okay? So no indicators, no patterns, no news, no fundamentals. I mean, you may think that they move the markets, but they don't. All that information is already priced in. So as I said, if we now add, this is like bullish correction, strong impulse, corrects, or tries to bullish impulse, corrects a little bit, bullish impulse, corrects a lot. Bullish impulses and corrections is always like that. So if you have a strategy that tells you, okay, my strategy tells me that the uptrend is defined by an EMA cross of 20 and 50 or 50 and 100, whatever you want, or any other scenario, okay? We don't need to use that with supply and demand, but you could use that, okay? So it is in an uptrend. So when you detect in an uptrend, this is a very simple exercise, okay? A very strong impulse made of 2 or more large candlestick bodies, then you have to wait for the origin. And usually this will play out unless there is a bigger picture downtrend and a strong supply right at the top above in control. It is not the case right now, okay? So it's trying to play out. So if we take a look at these are all trades that I've shared, okay? On the daily time frame, oops, what happened here? The Swiss franc versus Japanese yen, okay? I did an analysis when price was here, there, and all of them play out. All of them played out on this Forex cross pair. So you can use smaller time frame Forex scalping intraday strategies over there, when price reacts or starts to react, okay? And usually will play out. And since the Nikkei index, as I said before, is bullish, it means that the Japanese yen should be bearish, okay? Because it is highly correlated with the Japanese yen, the Nikkei and the Japanese yen, okay? So strong impulse, pullback, strong impulse, pullback, strong impulse, pullback. And it's all about that, bullish impulses and corrections. Impulse, correction, okay? Finger, like this. It looks pretty simple. But if you've got like an uptrend and you have strong, large candlesticks, strong ones, okay? Strong impulse, we wait for the pullback. This is supply and demand in action, okay? Some of these impulses will not be, this impulse for here is, for example, is not an imbalance. All imbalances are made of impulses, but not all impulses are become imbalances, okay? So that's explained in the courses, okay? So, but here, it's like textbook, okay? And all of these are shared in the YouTube channel, so you can follow me and see why this is happening at the moment, what I was saying about it, okay? So what I'm trying to say is that everything is moved by supply and demand. So let me check another one that is Aussie Yen. I shared this one recently. So again, this is a Yen cross pair, Forex cross pair, okay? I even drew the arrow the other day. So there it is, okay? So we've got, again, strong impulse, trust correct, strong impulse, drops, rallies, strong impulse, and then 2 days, and then it retraces to the demand level. So when demand overwhelms supply, price rallies, okay? When supply overwhelms demand, it drops. There was no supply there, but here we have demand and daily is in an uptrend. When you take a look at the smaller time frames, like the 1 hour, this is what we have. Look at the reaction. Price dropped heavily in the latest, in those 2 hours, okay? Back in the 29th of January, like yesterday, okay? It dropped down there, and look at the reaction, okay? Now it's trying to reach that area of supply. It's trying to reach it, like our first target. And look at the reaction. Why is this happening? If you don't know, sorry, this happened, yeah, here, the reaction, oh, sorry, the reaction was here. You tried to reach that area again. Okay, good. I was thinking that it was demand, but here, see the reactions, these wicks, and then it rallies. And when we take a look at the 4-hour time frame, we see the reaction here to the daily on this Aussie Yen cross pair, Forex cross pair, and then it reaches that impulse over here. And again, a look at the reaction. And all this is because this imbalance has taken control. Am I taking into consideration what is going on in the Japanese market? I mean, unemployment rates, Bank of Japan doing this, doing that. No, I don't need it. I don't read it. I just need where the demand level is located, and it is right there. And this is what I'm paying attention to. So if you still don't believe that supply and demand controls the market and your lives, because when you buy a pair of shoes, trousers, wine, a house, a car, you are really, really, really good at prices. Oh, this is cheap, this is expensive, please, you bargain, okay? Arabs and Indians, or Spanish too, we love to bargain, okay? So because we know what the right price is. But when it comes to trading, it's like, what is expensive, what is cheap? We become dummies, okay? We don't know. And supply and demand is like the, let's say, the compass that will tell us where the north is and what the south is, okay? So here is our north. Price drops, we buy, okay? As long as there are no obstacles, great, and we need a strong impulse, and it is exactly what is going on. So, and this is where beginners need to pay close attention. So Forex traders, in this case, they should pay attention to these imbalances, because if they ignore that, they will never know why was the 1 hour in a downtrend, blah, 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 and then suddenly it reverses. It reverses because it just hit a brick wall in the shape of a strong demand level on the daily, okay? That's it. It's very simple, okay? So impulses tell us who is trying to control price. This is the bulls, okay? And corrections tell us where price is reloading, most likely at the proximal line of imbalances. In this case, a demand level here. So a strong impulse here is not random in this Forex cross pair. It is institutional participation leaving a footprint, and this footprint, we should be like Boy Scouts or trader scouts, and we are looking, searching, hunting for these impulses, okay? And if you learn to identify these impulses, you are already ahead of most traders out there. Moreover, if you're looking at the bigger time frames, like I do, okay? So the impulse strength is a very strong filter, okay? I want to say that. So it travels fast, it breaks previous highs, eliminates obstacles here on the left, and show commitment, no hesitation. And we wait, and we pull the trigger. That's the way it is. So if we take a look at another one, let's change now to, instead of Forex analysis, I'm gonna do things I did before, and stocks that I shared before, okay? So this is Amazon. I share all this also my TradingView account. This is my TradingView account. You can follow me and see all the setups I'm sharing. Look here, Amazon stock, okay? One of the magnificent 7 stocks, Amazon. So very strong impulse on the weekly time frame that happened during October 2025, okay? And then in the beginning of November 2025, Amazon stock drops where? To the strong impulse. So strong impulse, correction. Now it's reacting to it, okay? And it's playing out. When you look at the left, if you compare this with all these price action, this is nothing. This is just noise. I mean, buyers, sellers, accumulation, distribution, blah, blah, blah. But there is no sign of anything. And then in October 2025, for whatever reason, okay, there was a positive news here during that week. At the end of October, then price rallies and creates this imbalance, this footprint that we, as trader scouts, we should be able to pinpoint, to locate. And this is actually what we did, and that's what I share in the community and also social media and TradingView. And this has reacted already, like rally like 16%, which is a lot, because it's not too much, okay, 16%, because when we take this and we protect the stop loss, this is the trade, okay? And I'm going to use the, on TradingView, the extension here to 3, okay? So it means that when you buy here a specific risk, 1%, 0.5%, How much money? No idea. What do you have in your account? 25, 100? I have no idea. I don't want to know. Okay. So it means that if you have whatever, your risk is $1,000 because you are risking 100%. You have 100K and you're risking $1,000. Okay. So you say, okay, I'm going to buy here and protect it right underneath. So it means that this becomes your zero. 210 becomes your zero. Zero is not at the bottom. Okay, and now it is here because if it reaches 210, I am out of the Amazon trade. Okay, so Amazon stock dropped down there. Price today is at 239 for Amazon, but there it reached that area. So it means that every single time that Amazon stock rallies the width of this rectangle, that is about how many dollars? $7.65. Every time Amazon rallies $7.66, then you double your investment. If you invested on Amazon stock $1,000, then by the time price reaches 225, you already doubled your Amazon stock investment. When it reaches this price, 232, you tripled your investment, you quadrupled your investment, and here on the 5, how you say that in English, I have no idea. And 5 times the risk. So the reward was 5, risk was 1. You can use option strategies down there to buy bullish option strategies. I mean, you can buy CFDs, which has a higher leverage, usually from 10 to 20 to 1, depending on the broker. And this is it. It's all about strong impulses. So does these price action have to do anything compared to this or this? No. When you zoom out, and let me stretch the chart like this, in the strongest rally in Amazon in a long time was here because that was a bullish gap, and here because of those 2 large candles. So it's all about price action, strategies, and supply and demand. Both govern the stock market. Okay? You like it or not. You may disagree with me, like many people disagree when they send me private emails that if I show you, you would feel like crazy. I mean, why is somebody bothered by what I say? I just don't understand. Okay, but well, it's very easy to criticize other people without knowing what they're doing. So this is Amazon. And then I also shared a few weeks ago, Pfizer, the well-known pharmaceutical company who manufactured the first COVID-19. I'm not going to talk about it because my opinions are quite, well, I'm not going to say anything about it. I'm not vaccinated, so you know now what I would say. So the thing is, same thing here. Look, we zoom out, and then where are the strongest impulses? Right at the top of the Pfizer, and there. Look at that candlestick. There were no news involved. Okay, news happened on Pfizer's stock the 4th of November, and then the demand level was already in control. So what happens is that the positive news for Pfizer pharmaceutical stock company, I mean, this demand level in control, together with the positive news, like created that volatility, okay, and allowed Pfizer demand level to play out. They won at $24 per share. So this is a stock trading, okay? You can use this strategy or methodology or any other for short-term intraday. You can scalp, but if you've got a big time frame demand in control, forget about it, okay? So what happens? Pfizer created another demand level over there, no pullback, creating another one over here. It did pull back, and it created now another one over here at around 25.69, okay? And you can see high, higher high on the daily. We've got an uptrend on the daily. We've got an uptrend on the weekly, and we can see the reaction on the daily time frame on Pfizer. So it's all about bullish impulses, corrections, bullish impulses, corrections, strong candlesticks. Oops, that should like trigger an alert. Hey, something's going on here. So it's not like, oh wow, strong rally, I'm gonna buy Pfizer. No. Wait, my friend. Wait, you have to wait. It's very simple. Okay. Not that simple, because when it gets up there, then you are like, your ego needs to be fed. I mean, you feed your body with thoughts and with food through the mouth. and oh wow, I'm going to miss the trade. I'm going to buy breakout trading. It broke this high, blah blah blah. Whatever resistance we have there, we're not trading support and resistance. Okay, this is supply and demand, nothing to do with support and resistance. And if you do stock breakout strategies, you lose. If you do supply and demand strategies, you make money. Okay, and this is Pfizer, and we saw Amazon. Let's take a look at two of the largest, the Magnificent Seven, okay? Microsoft and Meta. So we take a look at Meta. I recorded a video. I think I have the cloud somewhere. That was like a cloud. It looks like it is not that cloud. Oh well, no problem. Look at this. So this is Meta stock. This is an old message that I had at the top that crashed into here. Okay. But that was for Microsoft, no Meta. Okay, good. So Meta, very strong rally. I created a video at the top. I even drew a cloud, okay, a dark cloud color because it's the pattern over there. Strong rally, strong impulse. We waited and look at the reaction. I have updated this on my TradingView account and also on YouTube and social media. And look at that. I mean, when we take a look at this smaller time frames, okay, look at the reaction. The demand level is reached. As you can see, it rallies strongly. And now we've got a new level of demand over there, and we've got another one over there with a bullish gap that happened like yesterday, I believe. That's the positive news. And the 28th, today is the 30th, like 2 days ago. So bullish gap, positive. So bullish, what happens? If news happen as price is reacting to an imbalance, that's better because it's like earnings, positivity. It doesn't matter if it is negative. Even if we had negative demand level here the negative news release for Meta stock happened at the top, demand was not in control, so it's not a problem. But when we have demand in control here, you see price rallies. Here at the top, it rallies. And now that at the top, supply, demand is not in control. We had supply in control, and price drops. Here, demand in control, price rallies. So Meta is creating new areas of demand, as you can see. So price is traveling fast, breaking previous highs, creating new imbalances. Okay, it's showing commitment on Meta stock. It's not showing any kind of hesitation. Okay, so, and this is critical because strong impulses create high quality imbalances. In this case, demand level, no strong impulse, we are not interested in it. Okay, so we are interested because maybe demand is in control. This is very poor, simple, but we're still holding a long-term investment from here. So, but if we want to reload, like buy more shares or buy more contracts, option contracts, or for bullish strategies, then we have to trade at this demand level. Okay, and then price, we are expecting that to happen, and this is what we share in the trading community. And let me show you how the community works. Okay, and this is like the homepage. Okay, we go to the dashboard and we can see all the trades are playing out. Okay, here I added major corrections happening on the crypto market, so it's going to drop much farther. Bitcoin, and I did an analysis on Bitcoin, and you're going to see on the channels and everything. So if we go here and we search for Meta, okay, so I'm going to go to the last page for Meta, and we're going to see. Okay, we're going to go back here, for example. January 16th, Meta, demand levels in control. Okay, we are waiting for Meta to reach that daily demand level at around $603 there. Okay, trying to reach it, reacting to it. Okay, it's playing out. So now what I need to do is update this. I will do it later. And I'm going to say, okay, demand level played out, new demand level here, new demand level there, waiting for the pullback. The pre-market is already showing like a bearish gap of about 2%, more or less. Okay, but all this is happening. Why? Because supply and demand imbalances are controlling price, okay? In order to master trading, you need to understand and not to ignore the large time frame imbalances, supply and demand. So this is why this video is mastering supply and demand imbalances in the markets, because this is so important, okay? And if we take a look at Microsoft, I've been talking about this, I recorded a couple of videos too. Okay, this was the dark cloud, sorry. Forgot. I forgot that. Dark cloud cover. This is the bearish engulfing pattern. Sorry, bearish piercing pattern or dark cloud covers, like the Japanese say for this price action, multiple candlestick price action. So what happens here? We've been talking about this for a long time, okay? So what happens here? We've got here Microsoft dropping, where? To the demand level here, right? At the bottom there. So does this ring a bell? If we take a look at Meta, okay, same thing. Now let's go to Microsoft stock, very strong rally, bullish gap that originated there with positive news, all news. So it's like this. I mean, so positive news, nothing happened. Green positive earnings, okay? Positive earnings, it drops a little bit. Positive news, it rallies. Positive news, it rallies. Positive news, it drops. Positive news drops. So it doesn't matter what direction the earnings release is. I mean, positive, sometimes it rallies, sometimes it drops. So why people keep on saying, oh, wow, should be worried about earnings releases? Obviously, if you're trading smaller time frames in the stocks and you're using the 5-minute, 15-minute, 1 hour for scalping, the volatility crash and the spikes and all that will take you out, okay? Will hit your stop losses, of course, because you are trying to hit the center of a target from 100 meters every single time with the smaller time frames. Whereas when we are using the bigger time frames, okay, we don't want to hit the center of the target for 100 meters. We just want to hit the target. I don't care. Throw the arrow, okay? Hit the target. Doesn't matter if it reaches the target at the outside perimeter, the center, the white, the red. It doesn't matter. We just want to hit the target. That's it, okay? Once you hit the target, we don't care. But then intraday is like, oh, wow, let's go to the 50-minute time frame. Oh, wow, I'm going to trade where? Well, that one is good for shorts. But if you're using whatever, the Bollinger Bands, whatever, this would be like super overextended. It just didn't drop to the lower band, blah, blah, blah. But there's so many strategies they can use, okay? But we are using, or I am discussing, how to master supply and demand imbalances and price action in the stock market, the Forex market, as we saw. Or we could go into crypto too. It's the same, okay? So we, after a very strong rally, the impulse, correction, and the correction is weaker than the impulse, so long we go. As simple as that. So what matters is where price is relative to the higher time frame imbalances. That's why I always start with the bigger time frames, the monthly, the weekly, because that gives us the compass, the direction, and everything. Okay, and ignore them. I mean, losses become inevitable, for sure. Okay, so new highs, new lows mean nothing unless supply and demand gains control. Okay, and these larger time frames are non-negotiable. That's where patience, okay, when it drops down there, comes in. The high time frames take control, and you could see on Pfizer and Amazon, and I could show you not hundreds but thousands of them, and we can predict the stock market corrections and rallies with laser beam accuracy, and you don't need a PhD in economics, or you don't need to be a banker, and you don't need to buy expensive courses, and you don't need to follow earnings or follow newsletter that will tell you what the charts are already telling you, okay? And you just need to be patient. So this allows you to filter noise, show real institutional songs like this one of Microsoft stock, and keep you on the right side of probability, okay? That doesn't mean that you cannot go short on the way down with CFDs and bearish option stock strategies, but we're talking about going long, the highest probability scenario in this case, okay? But you need to wait, okay? So these are all real examples. If you take one thing from these videos, trying to outsmart the market is not a good idea, because the market has always got something for you, usually against you. Okay, so we master supply and demand, impulses and corrections, respect the higher time frames, supply and demand, and we let price action do the heavy lifting. Okay, and this is what we are doing exactly. So hopefully these, like I said, all these setups, stocks, crypto analysis, and so I didn't do crypto today, but stock are published on my YouTube channel and social media, and also on Center for Line Trading Academy and community, like on a daily basis. And we do this. Okay, I do this way before it happens. I mean, you just cannot say, "Oh wow, Alfonso is recording a video and Meta is here, and this is a demand level because of this." No. I'm saying up there, Meta is going to drop there, and I'm saying Meta is going to drop there, and it's going to rally, and I'm updating this. Okay, very simple. So you can check the videos. Sometimes they do. Sometimes price continues to drop and it fails. What's the problem? You had a loss. That's it. It's part of the trading game. If you like this video, click on the like button, subscribe to my channel, because I will be uploading more videos like this. Have a great day.